And hello traders, and welcome to another video. So in this video we are going to talk about again double confirmation entry, our new execution criteria, and we're just gonna go through some chart examples and see again when is okay to trade this and when it's not good to trade, etc. And also we are going to talk about another little bit of strategy refinement that again maybe you can start implementing or maybe not. Okay, so first thing, let me start with that. So we also have tested on all the pairs that we are trading currently if 1 pip stop loss more is working out or not. We tested if 2 pip stop loss is working out or not. So you add 1 pip stop loss to your stop loss, or you add 2 pips to your stop loss. We also tested if 1 pip before entry, because you already know you have also again price is gonna miss your entry and is gonna go without you. So we started to test that also. Maybe we can refine anything. So we did the 1 pip entry on our order blocks, 2 pips entry in our order blocks, and we calculated pretty much everything. We did every equation, every possible scenario that we can add to again refine strategy. And basically, guys, you do not need to do this because we have already done for you. So maybe someone's gonna try to do that, and you already know what is working out, what is not working out. So basically, out of all the things that we have back tested, only one thing is kind of working. So if you start to set 1 pip before your entry and 2 pips before your entry, you are gonna have little more trades. So when this happens, you're gonna have your order block here and price is just gonna barely miss your entry and it's gonna continue without it. And the idea is to set a pip stop loss before entry or 2 pips before entry, so we catch those trades. And we tested that, and basically it is not performing very well. So you're going to have some trades that were prior missed, but they're not gonna quite compensate the total risk reward that you are gonna lose in the long run. Okay, so what that means, that it means that you are gonna catch those trades that are missed entries sometimes. Okay, but what will happen, because you cannot do that one time and second time you're not gonna do it. You already know you need to have implemented strict rules in your trade plan that you're always gonna follow. So either you're doing it or you're not doing it. So what will happen if you start using 1 pip or 2 pips is that you are gonna catch some trades, not all of them, and basically you're gonna ruin your total risk rewards on every trade. Because if you have executed here 2 pips below your initial entry, you're gonna have a smaller risk reward in return. So basically, when you calculate everything, when you do a math and over the long period of time, this is really not working very well. So 1 pip or 2 pips entry before an entry is really not performing very well. 1 pip entry below or above your stop loss and 2 pips entries are decisional. Okay, so we have tested it and we have seen that 1 pip entry is performing better than 2 pips entry. Okay, so 1 pip is basically, out of 4 things that we have tested, you can use 1 pip to your stop loss, and this is basically that. Okay, so this is basically example of how it's gonna save you. So as you can see, our initial order block was here and it was 2.6 pips. in this kind of scenarios, when I have 2.6 pips, when I'm trading, I'm gonna set him on 3 pips. So I'm doing that all the time. But as you can see, 3 pips here is also not enough. So this is basically what I'm using currently and what I'm doing currently. I'm not adding a 1 pip to my stop loss. My stop loss is always strict and always precisely where the order block is, my entry, my stop loss. But right now, this is starting to get decisional. So again, it is going to save you from not as many trades. You know, again, what can happen is that you're gonna have your order block and price is just gonna go into it and it's gonna barely tag you off and it's gonna continue in that direction. But this doesn't happen a lot. It happens time to time, but it doesn't happen a lot. Usually when price tags you out, it's gonna tag you for more than 1 pip or more than 2 pips. So it's not gonna help you a lot in all of your trades. It's gonna help you sometimes. And sometimes, like in this situation, like here, so you can see 2.6 pips was initial stop loss. If you add another pip to your stop loss, this would be a save, and this would be like literally 32% trades in a single trade, 32% in single trade. So this is how 1 pip stop loss can help you, okay, sometimes. But again, your win rate at the end of the year is gonna be a little bit slightly deducted. Okay, so what is initially happening is that your overall percentage return, your risk reward is gonna be a little bit worse, but your win rate is gonna be a little bit better. Because there are times, like in these positions here, where this would be a stop loss, basically, if you didn't have a pip, 1 pip added on your stop loss, and it was like 30% trade. So it is decisional, and I would recommend you to really either you do it or you're not doing it. So do not mix it up. Like everything we do, guys, we do not want to mix it up. Again, because if you mix it up, factor of luck is going to be more present. So either you're doing it or you're not doing it at all. So you do not need to backtest all of those things. If you want, you can backtest only 1 pip stop loss. So you're adding a pip to your stop loss. That's perfectly fine. Okay, so again, it is going to reduce your overall risk reward, but basically for a small percentage. So maybe, I'm just making this right now, things up, I don't know exactly, but if you're on, I don't know, GJ, if you had 100% overall return, you're gonna have 95. And maybe 2 to 5 trades are gonna be, out of 30 maybe, are going to save you or something like that. Again, I do not know exact numbers, but I know based on, again, we did the exact numbers, but I do not remember them in my head. I do not have them right now in front of me. So basically is that. We have tested everything, and only thing that is going to work and it's not gonna fuck up, sorry for swearing, your overall risk reward at the end of the year is adding 1 pip to your stop loss. So again, decisional thing, you can do it or you cannot, or you do not need to do it. Again, first backtest it if you want to do it. And again, if you decide to do it, stick with it. So in every position you're gonna add it, or you're not gonna add it in your position. So again, decisional thing if you want to do it or not. So this is basically the smaller refinement that we did. I didn't want to make extra video for it, so I wanted to implement it in this video here. So yeah, right now we are going to talk more about our double confirmation entry and when to use it and how to use it, etc. So basically we're gonna start breaking down the chart here, guys, and we're gonna use something like this here. And basically what price action here is telling us, guys, is that we are seeing that the downtrend is present. So price action is putting those lower lows in the market, and price action is going to the downside. So we have seen this momentum, we created some imbalance, we saw this huge week. Immediately after this big week, we had a retrace, we again broke the low, again retraced and broke the low. So we have seen that we have a downtrend momentum overall, imbalance left behind, and we saw this weakness in price action here. And this price action right now, this pullback, I mean, you can see it, it is very corrective. This is the perfect type of ascending price action that we want to trade when we're trading. So as you guys can see, we broke the high multiple times and retraced, broke the high multiple times and retraced, broke the high multiple times and retraced. So corrective ascending price action that we all love to trade. So ascending price action indicating reversal, downtrend momentum is on our side. Everything is pointing out that price is going to continue bearish, and then you see a break to the downside. So as you guys can see, wait, let me delete this for just 1 second. You know that I do not like when the price, when the chart is messy. So as you guys can see, based on this price action that we are seeing right now, we can see that overall price action is higher probability, okay? And you want to get involved in this trade. Of course you want. So we have seen that we have this change of character. We have seen that we have beautiful, I mean beautiful inputs to the downside. Look at this beautiful candle, no wicks to the downside. Even this candle was just a pullback. We have seen imbalance, so we already know that we want to see a corrective pullback to order block. Order block was also small. It was 2019, a beautiful time to trade, not volatile like that. So right now, basically this order block was 4 pips. So beautiful execution, and overall price action was really, really nice. We want to get involved in this reversal continuation trade. It's reversal because it's breaking the lows. It's continuation with overall price action and with this impulse correction impulse here. So basically continuation, but type of reversal of this ascending price action. So again, weakness to the upside, guys, momentum to the downside. We want to get involved in this order block. What happens next? We have set our limit order, we have set our pending order, and we are waiting. So as you guys can see, right now in this position, we think that we are most likely going to get triggered in this position. Price action is pulling back. This is perfect. After this, we want to see retrace to the downside and then another pullback. This would be really, really high probability to see. What happens next is price action does that. And right now we just basically wait another leg to execute the high probability trade, okay, on your USD, and price action breaks the low. And right now you're devastated because again, overall price action is high probability, but we broke the low. And right now, you know, you cannot execute because this is not valid anymore. And I was thinking about it for a long period of time, and I wanted to change that. Because I saw for myself basically this year that I wanted to execute 2 or 3 trades that did this, basically broke the low and then give me execution, and I skipped them. I didn't took them because of that. So price action was high probability, everything is high probability, trade was in my trade plan, everything was on my side, but I didn't execute it because we broke the low. And both trades, it was 2 or 3 trades, I do not remember exactly, and all 3 of them or 2 of them basically finished with massive risk reward, 20 or 30%. And I did a calculation, it was like more than 60% return that I basically didn't had because, you know, price broke the low. So I wanted to fix that. I wanted to change that. I wanted, you know, to make something better so we can still trade this. And this is why I started working on double confirmation entry. So basically, again, guys, I'm telling you this can be an extra confluence for you, because you're gonna have right now you can trade this and you're not gonna miss out on higher probability entries. But also at the same time, it can be bad, because sometimes price action is not gonna be as beautiful as it is here. sometimes price action is going to be terrible, and this is going to happen, and you're going to either execute it. So earlier, before this would be a broken low, and this would be invalid order block. Okay, this would be not valid anymore, and thus that would mean that you were going to be saved from a lot of losses. What can happen now, right now, this, if it breaks the low, it is still valid for double confirmation entry. And what can happen is that you're not gonna see a beautiful and nice overall price action, but you're gonna have a corrective price action, shitty price action, terrible price action. But right now, because you know that we can trade double confirmation entry, you're gonna still trade it. A bad thing can happen if you're not careful. Okay, guys? So again, price action needs to be high probability if the low is taken barely. Okay, so there are basically two things when you want to execute this trade, this pattern. So first is you have, let me just show you like this. So you have a beautiful downtrend. Let me try it correctly. So you have a beautiful downtrend to the downside, and then you see a corrective pullback to the upside, and then you see a breakout to the downside. Okay, so right now price starts to pull back, and price action breaks the low barely, just barely breaks the low, like this with the wick. And right now you see that you have beautiful price action here. Trend is bearish. Price is making this a standing price action, breaking the lows impulsively, putting new levels over the market. Structure is present, order flow is present, everything is beautiful, but low was taken. And right now it's like, why it needed to break the low? I want to get involved. This is beautiful setup. Right now you can get involved, and this is when you want to take advantage of this pattern. When price action is beautiful and the trade is in your trade plan, but we barely broke the low, you want to get involved here because this is high probability. Okay, this is one scenario where you want to execute this pattern, and when this pattern can help you out and boost your overall trading performance is here. Okay, basically here, when the price action is beautiful, everything is good, but price just barely took the low. Okay, this is where you want to execute that pattern. And second thing where you want to execute this pattern is when you have a standing price action, and when you have a change of character, break of structure, and then you start to see a pullback, and then you start to see again another impulse. And right now, where do we want to get involved? We have seen that we have a weakness here, price action going with momentum, retrace momentum. This is beautiful continuation, and we want to take advantage of it. And usually what we want to do, we want to trade this, okay? But what happens if we do have a big wick and we have aggressive pullback? It is going to happen that right now you're going to execute here this, because again, overall price action is high probability, but most recent price action is not high probability. And it's going to be extra decision-making process right now in your trading, because you want to get involved so bad in this trade. But you know that this is aggressive, and you know that going against momentum is a bad thing, and you necessarily do not want to do that. What happens now is that you have a double confirmation entry. So you can ignore this because this is aggressive, and you can wait to execute it here. You're gonna get a better entry, you're gonna have a more risk-reward trade, and again, a part of decision-making process of this order block, aggressive order block, is going to be eliminated. So those are basically the two things that when you want to execute a new execution criteria double confirmation entry. Okay, guys? So this is where you want to take advantage of it. But again, do not forget, this impulse needs to be clean. Okay? Also, this needs to be clean. Everything needs to be clean in order for you to execute the setup, guys. Okay? Do not... wait. we have seen this and this and this and this. If something like this happens right now, this is your double confirmation entry and this is your order block right now. What happens if price makes this and it breaks the low? Right now, this order block is not anymore your double confirmation entry. Right now, this is your first entry and this is your double confirmation entry. So do not forget that. Remember that. Do not, make a mistake and right now you want to enter here. No, it's not allowed. Again, we have strict rules. You're entering either on this or either on this. But again, this and this and this needs to be clean. So let me delete this as well, guys, and we're gonna talk about it. So look at this. It was basically, just broken low with the wick and then entry. Okay, so this was a little bit aggressive entry, and also it was a decisional if you wanted to take it or not, because we had we didn't had impulsive break of structure, and we didn't had good confirmation here, and we had, again, third thing that was bad was this impulsive momentum coming to our block. But again, overall price action was good, everything else was good, and we just barely break the low. So barely breaking the low here, again, pushing to the upside, this would not be invalid to take, but right now, because we have a double confirmation entry and we barely broke the low, okay, we can execute it. Right now, this would be decisional for you guys if you wanted to execute this trade or not, because again, the momentum was high and momentum was full bullish. You already know what you're doing in this situation. On the left side, you're writing down the positive confluence. On the right side, you're writing down the negative confluence and you're making your decision. As you can see, yeah, the price just pushed to downside. Again, this would be a minus trade if it was ordinary order block. So it would be stop loss minus 1% if the order block was normal. But if you added one pip to your stop loss, this would be a lifesaver. So again, another decisional thing that you maybe are going to use or not going to use, this is up to you. So yeah, just trade continue to downside. As you guys can see right here, we had this inside bar and price just tagged us out of the trade. So basically that's it, where you want to use it, when not to use it, and all about it. So let's see some more chart examples, guys. So you're gonna see that double confirmation entry is performing a little bit better on Euro AUD than the basic hybrid strategy. It is performing very well. So as you can see, again, a nice chart, nice example. We have a weakness to downside, price going in this downtrend momentum. We have first change of character here, but we didn't have a quite momentum here. We did and we did not, because again, if you look at this as impulse, correction, impulse, it's a classic continuation, okay? But if you look at it from if you look at it with this weeks and this weakness or overall weakness in this momentum, it is not that clean continuation. So as you guys can see, this demand was failed, but we reacted from this. This was the demand that firstly created this move. So as you can see, firstly created this move, broke this and created this, basically this momentum to the upside. So we are using it as a reaction order block, of course. And as we can see, basically the trade, the price reacted from that order block, pushed to the upside, made a wick. Again, we are looking to enter here, and that didn't happen, but we continued up. So as you can see right now, price with this momentum is showing you that it wants to continue to the upside, but right now we cannot enter. We're gonna enter only here. Let me do this. So right now, with hybrid, you're gonna look at this, okay? this will be your order block, legit order block. Okay, this will be your legit order block that you want to take your trades from. But as you guys can see, this was risky to take, and overall price action was good. So we have a reaction, price mid change of character, weakness to the ups to downside, even some type of news pattern here, not quite because we didn't left a lot of imbalance, but you can see momentum and then weakness in price action, and then a reversal, classic reversal, but it was not a reversal, it was basically continuation here. If we want to trade here, we had descending structure, the trend and order flow, and everything was really good about in this trade, really beautiful. So right now you know that this entry and this order block can be quite aggressive, especially when it comes back correctly like this. Okay, the candle was good, the candle was perfect, but we didn't had an impulsive break of structure. So we didn't have an impulsive break of structure, and we had aggressive retest. So this is where this new pattern can help you out, because right now you can ignore this order block and you can wait to execute on double confirmation. Okay, because you already know that this is what created this move, you know, to the upside, and you want to get involved here. It was coming back again aggressively. It was aggressive, so it was again decisional if you want to take it or not. But as you can see, price just continued to the upside, and yeah. So basically, you know, it can be it can help you out in your decision-making process when you're executing the trades. You know, you can completely ignore, because this would be a stop loss. And if you have seen this price action and you would be like, I want to get involved, FOMO would be present, because overall price action was quite nice and then most recent price action was not that nice. So again, this execution here, this entry here, in certain situations can be safer. Okay, guys? Can be safer. And as you can see, it's clean. You have impulse that has no retraces in momentum. You have a retrace here, one retrace, and just one break of structure. And again, no retraces here. So it is clean. Again, we have rules that we follow here, and then we execute. This was again aggressive retest, not quite here. It was slowing down momentum here, but the momentum hit here. So this was EUR/USD. So again, 15 pip stop loss was quite good. You can execute also on 50%, but again, on this pair until 20 pip stop loss is perfectly fine. So again, this can help you out in your decision making process tomorrow, guys, when you are like wanting to trade this order price action, but you do not have you know, quite good breakout, you have aggressive retest, etc. So you can ignore this and you can start trading this on double confirmation. So let's see another chart example on AJ right here. And this is the pair. We're going to do a separate video about pair characteristics and, you know, what types of entry you're going to look, etc. But I pretty much like AJ. It is really high probability, specific entries, high probability. This kind of entry is high probability for me. And also what I want to say is never mind. So we already know, yeah, AJ, I like AJ and I like Euro JPY with this continuation model, double confirmation. It's really quite nice. So what I want to see in this kind of situations, you already know that AJ and AJ love to do this. When we have basically corrective trend going to the upside. So you're gonna have a lot of corrective trends on those pairs, and you already know when it's trending, it makes a fake out and then it continues. It makes a fake out and then it continues. Okay, so if we trade this can be a stop loss, but here is our double confirmation entry and this can be a win. Okay, so basically this can be really high probability when you trade those pairs, and you already know that it likes to trend to continue to the upside. but doesn't give you a quite nice setup to execute it. And then the trend is gone, and you're gonna look at it. You're looking at it, and oh shit, I didn't had a beautiful entry trade. And right now, basically that is also fixed, and we can take more advantage of this corrective trend on those pairs with our double confirmation entry. So basically what I want to see is, price trending to the upside on AJ, momentum to the upside, but you do not have a beautiful situations where you want to get involved, okay? And right now, again, the same thing, price action, pushing to the upside, again, showing you this corrective trend, retracing, giving you this or block, pushing to the upside. You would execute it here, basically, but it doesn't happen. It breaks the high barely again. And the high probability entry, continuation entry on AJ is ruined right now. Okay? You would not trade it. You cannot trade it because it's invalid. Right now, because this just small weakness happen. And right now that is also fixed. And again, you can trade it on double confirmation. As you can see, this was 19 pips or something, so we would trade it at 50%. So as you can see, again, it was this is not pretty much that aggressively. We had a one retest in momentum, second retrace, third retest, and then fourth retest, a retrace in momentum. But again, you can see every second candle was pretty much bearish, so it was like, a little bit aggressive, but also corrective at the same time. So again, decisional if I wanted to take it or not. But again, I find this pattern really, really nice and really, really beautiful on those corrective trends when we have basically on AJ and AJ. On GJ, double confirmation entry is not performing that well. I do not like it. To trade it on DJ, and I started talking about it, so I'm gonna talk about it. So we're gonna talk about pair characteristics in this video, guys, because I already talked basically about 30% of pairs. So yeah, let's continue. Let's continue. So basically, I like the strategy on AU. It is quite good on AU. I do not like it on AU. It is not that great, and overall win rate and risk reward is pretty bad. So I'm not gonna trade it on AU. Okay. AJ is not bringing us that much risk reward. So I think in 3 years or something we have maybe 30 or 40% more added to AJ, so not that much. But what I like about AJ, you're gonna see that unfortunately we had a lot of miss entries. We basically have a lot of miss entries that were going and going and going, and every other entry that you see that is good entry is this one. So basically when you have a trend, corrective trend on AJ, you want to get involved in double confirmation entry. So I find it beautiful and I like it. Also AJ, I love it. Basically the same thing, like AJ and AJ are beautiful, and specific entry that I want to trade is continuations. Continuations when we have this trend pushing to the upside, and that happens a lot on these two pairs. So you already know you're gonna have ascending trend going and going and going. You want to take advantage of it, and you want to take a double confirmation entry. Then we have GJ. I do not like it, and I am going to completely ignore GJ when I trade. Again, guys, you backtest everything. First backtest and then make your own decision. Do not listen to me, because maybe you're gonna find something, that I maybe missed, or maybe I do not like personally, etc. Again, we are different people, we are different traders, our trade plan is going to be different. So of course something's going to work for me, something is not going to work for you. So just backtest everything and see for yourself. Do not just eliminate the pairs because I'm eliminating them. So what we have else, So AU I'm not gonna trade, GJ I'm not gonna trade, and I need one AU, AJ, GU, yeah. GU is also, GU is with hybrid also not that great. So with double confirmation is not that great. I think that is a little bit better with double confirmation. Maybe I'm wrong, I'm not sure, but you need to check it. And yeah, I'm basically going to ignore pretty much GU also. And then we have AA and GA, okay? And those trades, both trades are going to have a bigger risk reward, bigger percentages return on a yearly basis than all of this. So these two. Basically, double confirmation entry is bringing you more percentages than hybrid, original hybrid. But as you guys know, these two pairs are really corrective. And when I look at corrective price action, and when I look for corrective trades, etc., I cannot trade it. So these two guys here are going to give you a really big percentage return on yearly basis, but those trades, I do not find them high probability or something, and I do not think that there is a lot of edge involved in it, like I find on AJ and AJ right here with this kind of entry, with this kind of setup. So this is why I'm gonna take advantage of this, and probably I'm gonna ignore this. This two and this two I'm probably going to ignore. So basically what I'm gonna be doing pretty much is trading this. So I'm gonna use basically double confirmation when I'm trading this. Okay, so that means aggressive trades like this. Okay, but if I see on AU, for example, that I have this ascending and then I have a breakout, okay, and then I have a perfect setup, but then this happens, I'm still gonna trade it. Okay, so it doesn't necessarily mean that I'm gonna ignore double confirmation entry on AUD USD. It doesn't mean that. Or if this happens, you're gonna have a selling price action and then price action going to the downside and then a pullback and then continuation. Okay, and then this is aggressive, and I am still going to trade, maybe to ignore this. I'm going to ignore this because this is volatile. But if this bit of price action starts to slow down and I have a beautiful double confirmation entry, I'm going to trade it. So it doesn't necessarily mean that I'm not going to trade it. If it helps me in my decision making process and I have better order block above, I'm going to still trade it on AU. But I'm not gonna use it as much on AU like I'm going to use it on these three pairs here. Okay guys, I want that to be clear. And again, this is only me and what I have in my trading plan. You guys need to first backtest everything, of course, and then slowly start implementing in your trade plan if you like it or not. Because again, this pattern is not gonna bring you only more percentages. This is gonna help you in your decision-making process. In a lot of scenarios, you're gonna see that you're gonna ignore a lot of order blocks, shitty order blocks, going against momentum, and it's gonna save you a lot of percentages in the long run. So even if you do back testing, and because right now you're gonna have a data of hybrid and you're gonna have data of double confirmation. When you're going to live trade, sometimes because of double confirmation entry, maybe you have a minus 1% on hybrid on your backtesting data, but right now you would not take that 1% entry because you have a better block here. So maybe data when you're doing it is not gonna be totally correct. Okay, so watch out for that when you're backtesting. So again, when you're live trading, it's gonna help you enormously in your decision making process. And just make sure to backtest everything properly, guys. And that's pretty much it. So yeah, that's pretty much it of this video. Yeah, that's pretty much it. We're gonna do a couple more, guys, so yeah, just stay patient. That's it for this one, and yeah, see you in the next one.